Good evening, ladies and gentlemen. Welcome to the third episode of 360TF Business Unplugged series. This initiative aims to unite industry leaders from various geographies and sectors to discuss significant topics of concern and importance. Join us for an enlightening discussion on maximizing efficiency through innovations in working capital optimization solutions. We are proud to host two distinguished experts. Federico Borgmeyer, Chief Partner Officer and member of the Management Board at efcom, and Kunjan Kapadia, Head of Banking Alliances and Investment Banking at 360TF. Their combined expertise promises an enlightening conversation you won't want to miss. Kunjan is a CFA charter holder and Penn State alum. In her 19-year career, she has held leadership positions in various facets of financial services, from asset management to strategy, investment banking, portfolio management, corporate finance, and banking in the UAE and the US. Kunjan's leadership has spearheaded impactful capital market transactions and utilized technology to tackle trade finance hurdles. As a member of 360TF Dubai, she is part of the team that oversees fundraising, banking partnerships, product, and finance innovation. Kunjan's commitment to excellence in banking and finance is fueled by her deep-seated passion for driving transformative change. Without further ado, let's welcome our guest, Federico Borgmeyer, Chief Partner Officer and member of the Management Board at efcom. Federico brings over 30 years of banking technology expertise, spanning finance, AI, cryptography, and distributed ledger technology. With notable roles at Gemalto, McKinsey Startup 2000 Fidelio Networks, and DataCard Corporation. He's led in business planning, finance, merger and acquisitions, research and development, and more. Currently, as Chief Partner Officer at efcom, he drives global marketing and sales strategies, aiding clients in building profitable financial businesses. Federico's consultancy, project management, and entrepreneurial ventures, including Eclipse City and Food Explorers International, showcase his innovative spirit. He's lectured at the European Business School and the University of Applied Sciences in Darmstadt. With a global background and fluency in Spanish, English, and German, Federico is a catalyst for industry innovation and growth. With these introductions complete, I would now like to invite our CEO and co-founder, Mr. Vikram Lodha. Vikram has over 20 years of experience in banking, including roles at Citibank and Kotak Mahindra Bank in India. Over to you, Vikram, for a few words before we begin this fireside chat.
Thank you, Akshita. That was quite energizing. Welcome, a wholehearted welcome to Federico, a dear friend, and all I can say is someone from the industry who's traveled extremely well across the countries, knows multiple industries, knows multiple types of customers, technology, regulators, bankers. We couldn't find anyone better to talk about factoring as a subject than Federico, who can give a flavor, a cross-functional flavor of the subject from various perspectives. And who better than Kunjan to take it up with Federico? I know the fact that they've been working together on the common project for more than a year now. So thanks, Federico, once again, and over to you, Kunjan. Thank you.
My pleasure. Thank you. And welcome again, Federico. And thank you for unplugging with us this Friday afternoon or morning where you are. Well, it is afternoon. So Federico joins us from Germany today, and he flew in this morning from Armenia. So I think he's maybe slightly ahead of time or before time. It depends. Lovely. So you get started, Federico, as the stage has been laid, working capital solutions, etc.
Mm-hmm.
What are some of the most promising innovations in working capital solutions that you have observed recently?
Mm-hmm. Well, since thank you 360. Thank you, Vikram. Thank you, Kunjan. Thank you, everyone, for having me here on this discussion, on this fireside, or in our case, it's a rainside talk. Outside, it's raining cats and dogs. So I hope in Dubai you don't have that right now. However,
in Dubai, it would be fireside.
In Dubai would be fireside. Okay, so fireside and waterside on this side of the planet. Capital optimization, a big topic, because at the end of the day, we all know 99% of all companies, globally speaking, and that plus minus a few differences from country to country, are small and medium enterprises. And everyone who's had its own business and enterprise as a startup or as a small company knows that this is one of the super prerequisites: capital, access to capital. And if you don't bring money, the banks won't give you money. So one of the let's say instruments, financial instruments that we're seeing is growing most, and this is the space where we're in right now. We call that receivables finance, and that may say nothing to you. Of course, to you, yes, but to many people, it doesn't say anything. Now, when I came back from Armenia and I was asked by people, what are you doing here? And I said, well, I'm in this space called receivables finance. People looking at me like if I was talking in Martian or something like that. And then I explained to them what it is. And then I said, that's cool. So that means that I can have access to capital because I am, in spite of being a small company, and they won't let me aside. And said, yes, that's exactly what's happening. So this instrument has been growing over the last 20 years a lot. When I say a lot, I mean sometimes double digit, sometimes only single digit. It's not seen 1 year with the slump, with a drop. So it only knows one way, and that is up. So receivables finance is the instrument, let's say the financial instrument of the day, and as we see it, it's not going to change at the moment in its yeah, let's say in its development, in its growth. So this is something that I would encourage everyone to look after.
Well, that's interesting. So the past 20 years, the acceleration in receivables finance has been, the momentum has been intensive. Then Absolutely. What about the history of this product?
Right. I talked about 20 years, and at least from a German perspective, next year we're going to celebrate 50 years of the let's say the German Association for Receivables Finance for Factoring. But if I ask now a question into the audience, and I know that there are a bunch of people listening to this, and I would ask them, how long do you think this has been around? Has it been 50 years, 60, 70, 80, 100? And we could do a poll, and probably everyone would say, well, maybe 100 years into the time. The reality is receivables finance is almost as old as civilization. And we can go back to Babylonia, to Mesopotamia, and which is currently Iraq, and find printed or carved, in this case, on stone, literally factoring contracts. So, and why do we know that? Because we found them. I brought an example with me, and I don't know if this can be seen right now. Everyone has been in a museum at some point in time, and maybe you have seen these cuneiform stone carvings. Well, they come from that region, from Babylonia, and once they were deciphered, what they mean, they figured, okay, it's not really sexy stuff what's on it, it's bloody contracts. And so we know that this has been there for 3,000 years, and it's it's pretty much stayed the same over those 3,000 years. Plus minus, so it has been up and downs over, of course, over history, but in those days, trade was made also. So, and this is an important topic, because when I came back now from Armenia, where the European Bank for Construction and Development annual conference took place, and all the bankers of many regions gathered, the hottest topic, of course, was trade finance. And the Babylonian carvings that I just showed to you, it's about trade, and it's about financing trade. Is it the oldest? I would say there's probably older than the 3,000 years, but this is the one that we found as humans. So we know that it existed 3,000 years ago, but it probably was there 4, 5, 6, I don't know, 1,000 years ago. So it's old. What we're seeing though now is the rocketing development on this. So factoring, or receivables finance, as we call it, also depending on the different types of instruments, or let's say derivatives that are out there, it's been growing all the time.
Right.
And
so
one thing to finish maybe is the interesting thing is residual finance, or residual financing is in this case growing faster when there is uncertainty in the market. So when there is no uncertainty, when everything is nice and everything is predictable, then our instruments are not so exciting. But if there is uncertainty in the markets, and I guess we have a bunch of that right now, for a foreseeable period of time,
right,
residual financing is going up.
And that's because you have something that's constitutes a part of the real economy backing it up. So maybe you could break down for us a little bit, Federico, what is the core concept of invoice factoring, receivables finance, supply chain finance, reverse factoring, all of those?
At the end, when someone asked me, "Hey, Federico, what is this factoring thing?" Then I say, you know what? It requires 32 seconds to explain that to you, and I will do these 30 seconds or 60 seconds now. We all know what a buyer is. We all know what a seller is, because we keep doing that all the time. We buy something or we sell something. When we sell something, that's perhaps not the daily bread and butter, but perhaps something that is a machine, tool, or a car, whatsoever. When it's a capital good, then, or an industrial good, or even a service, what happens is that the buyer would like to pay later. So you sell me something, I tell you, yeah, no problem. I pay you in 30 days, 60 days, 90 days. It depends a little bit of the geography and the customs in the market. And obviously for the vendor, for the seller, this can create a problem. So you have the buyer, you have the seller, and the seller wants to have its money right away, and the buyer wants to pay as late as possible. And here comes a third party into the game, and that's the so-called factor. The factor is a financial services provider. Can be a bank, but it doesn't have to be a bank. And what this factor will do is you propose to the vendor, why don't you sell me your invoice? So it's not yours anymore. It's going to be mine. It's going to be on my books. There are variations where they don't have to be on my books, but to make it easy. So I'm the owner now of that invoice, on that asset. Invoice equal asset. And I will later charge the buyer. But in the meantime, you already get your money with a little discount or percentage or whatsoever, factoring fee as it is called. You're a happy child because you received your money right away. You don't have to wait the 30, 60, 90 days. And if you're doing full service factoring, which is one of the types of factoring out there, you don't even have to worry anymore if the buyer is going to pay or not. So you're fine. You have your money and the other one has to look after the money. So you're good to go. So the factor is also doing all the claim management of your invoices. So it sounds all perfect, especially for small companies who don't have an extensive financial department doing that for you. And obviously you have your money immediately. And now we come to capital optimization. Your cash flow is flowing right away. So you don't have to, because you will have most likely also suppliers that you have to pay to. You have inventory cost, etc., that you have to pay for, and so it goes. And in this case, you improve your cash flow significantly. We say that in an economy, let's call it a geography economy, that has a high percentage of factoring in its economy going on, that you have a healthy economy, because it means that your small and medium enterprises are being financed. And the goods and services that are being financed are real economy. So it's not money that's being financed. It's goods, it's services, it's purchasing of phones, it's purchasing of coffee, it's purchasing of tables, it's purchasing or buying of the goods that we require for our daily life, or also for industrial input and output. So you could tell that an economy that has a high amount of receivables finance in its economy, that they are healthy. So, and vice versa, or the opposite, an economy that has nothing or very little amount of residual finance is not in a healthy condition, because its small and medium enterprises are not very well funded. So you could make an analogy in this case.
Right.
So it's an important instrument, also from a geography or economical point of view, political economical point of view development. So it's in interest of every country to have this instrument on site, regulated. And India, for instance, has been smart enough lately in also regulating this particular instrument for its market. There are markets that are regulated and there are markets that are not regulated. The markets that are regulated flourish better because all the players, the ones that I mentioned, buyer, seller, factor, know exactly under which terms this kind of trade back and forth functions, and what is okay and what is not okay. India, as I said, and also the geography where you live right now, Kunjan, the Emirates, have done the same thing. So a few years ago, it had passed the law, and so now factoring is possible also in that geography, making it possible to go on. And we're seeing the first nascent moves in that direction, in the right direction, and the same in India. So this pretty much as the concept. Where it is very well developed, in Europe. Europe has today about 70% of the global factoring market. How large is the global factoring market? Huge. It's 4 trillion euros globally. That means 3% of global GDP. Global GDP is about 100 trillion. And so this is the amount that's being traded, and Europe is is about 70% of that. China is about 25% of that. So how much is left? 5%. So 5% for the rest of the world. And that means the Americas, including the United States, from north to south, Africa, the Middle East, India, everyone in Asia except China. So there is a big potential out there. Yeah.
Well, absolutely. And, you know, in our conversation earlier, you mentioned 70% of the 4 trillion volume is European, and that is also primarily domestic, right? So cross-border is not even scratching the surface. So when you add that,
yes,
because, you know, the very, very much touted 2.5 trillion trade finance gap figure is actually half of the 4 trillion.
yes.
And the 2.5 is part of the domestic invoice factoring that takes place in Europe. So that's very interesting to see that perspective, that if we actually mainstream this, it has the potential to plug that gap. And building on what you said earlier on the geographical growth in various countries, etc., could you perhaps elaborate a little bit on that? Because you had an interesting anecdote on Chile earlier. You were mentioning something on Asia as well. So I think the audience would really benefit from hearing that.
Right. So I mentioned Europe, I mentioned China. Okay, so everyone would say, yeah, of course. But there are some champions that you wouldn't think of here and there. Yeah. Just to give you an example, when I look into Latin America doesn't represent today much of the global, let's say, factoring volume. But if you look into how much of the Latin American percentages out there are who is driving, let's say, the residual finance in that region, you wouldn't expect the country I'm going to tell you. You mentioned it before, and that's Chile. Chile, which is a very long country. I think they have like 4,000 kilometers of coast in the southern part of South America. Very narrow, very long, but it's a small economy. It's a small economy. It's a small country in terms of population and economy, but it is very developed, very developed. And they are kind of there's no Chilean, I guess, in this conversation. So the Chileans are the hardworking nerds in Latin America. And they do everything perfect. You would think that you're dealing with Swiss people instead of Latin Americans that would be dancing all the time. No. It's the Chileans do everything as it has to be, you know, from a business perspective. And they developed this receivables finance market. And my friend Claudio Martinez, who's the head of the Latin American Association for factoring, guess where he's from? Well, he's from Chile. And these guys, they make almost 15% of their GDP in factoring. So, oh my God! So you would say, okay, then Brazil, who's next, or Mexico and Argentina, who are bigger economies than Chile, because Chile is going to be like number 5 or 6 on the Latin American continent. I'm not including North America in here, but if you include Mexico, Brazil, Argentina, Colombia, etc., Mexico only does 3% of its GDP. And it's next to the US. I mean, you would say, hey, these guys are profiting and benefiting from having the big neighbor and doing all the manufacturing for North America.
Sure.
But receivables finance is not that developed as it is in Chile. So it has to deal with having a good regulatory, of course, number one, and then second, a financial system that is hungry for financing small and medium enterprises, and that's happening in Chile. Absolutely. And we see the same in other regions. I mean, if you go into Africa, for instance, I was in Zimbabwe a few weeks ago, and the whole continent, which represents, I think it doesn't count for more than 1%. I don't think that it even reaches 1% of the total factoring global volume. But it's a huge continent, many people, a lot of economies. And who drives that almost 1% is one country, and that's South Africa.
Right.
85% comes from South Africa, and the remaining economies following are Morocco and Egypt and others to follow. But everyone needs it in there, and there's so much appetite for this. When I was in Zimbabwe, everyone was saying, "Hey, when can we start? What do we need to do?" Because everyone in that region is in so much need for financing that economy. So this is in many respects a good product, a good financial product that benefits everyone, the economy, the financial systems, and of course the buyers and the vendors to increase trade. And as you said, one last topic, and that is international trade also, because you mentioned very well, very little today, but we're seeing it growing up, because also that is possible with residuals finance, cross-border factoring.
No, absolutely. And as you mentioned, there's certain regulatory advances that have taken place. UAE, for example, has opted to adopt the model law of factoring, which was last year finalized by the UNIDROIT. I'm not going to pretend like I know how to speak French.
Perfect French.
Okay, so them as well as in India as well, and specifically this region, when you talk about India as well as Middle East, right? There are so many bilateral agreements, and even talks about bilateral payment systems and currencies, which is a completely different topic, and it would be a next interesting one for us to have. With that, the invoice factoring, supply chain finance is such a natural fit. And it's where we sit anyways here in the company. We see a lot of those offshoots that were offshoots earlier, which are now springing into shrubs, and we're very excited to see where that goes. So we think the hotbed, just like you, would be Africa, Asia, and Middle East.
Yes.
But Federico, you come from the subject matter background, and of course, efcom, you come from technology background specifically as well. So all of these things, we understand that the regulatory framework provides the support, but the technology is a key enabler here, right? Is that why we're seeing everybody talking about invoice factoring, supply chain? As you said, it's been around for a while.
Yeah.
So why important now?
Yes, let's go back to the stone. Can you imagine doing this today? So it would be fun, right? Doing the contracts like that, but it would take a long time. Every single invoice, every contract, to do that by hand, by stone, to last forever. So we're seeing in the digital age a big advantage to speeding up the processing of that. And speeding up also means reducing the cost, because at the end of the day, there is a cost involved. If we do the stone thing, we'll have to have a bunch of masons doing the work. And it would be, everyone would say, hey, it looks nice, but it's too expensive, it takes too long. So we need to simplify the processes, because at the end of the day, the small and medium enterprise doesn't want to pay too much and doesn't want to wait too long. So these are two elements: pay too much, wait too long. And then there's a third one in the industry, and that is risk. Because at the end of the day, there's always someone that wants to sneak in and do something that's not correct. let's call it fraud. And so you want to prevent fraud, you want to be fast, and you want to have your costs down. And as we know, technology has been developing over the years, and every year we're faster. Every year we can process more and more data. The so-called law of more doesn't apply anymore, because we're now, technologically speaking, running faster. So we can process more per year or every year than we did the last year, according to the law of more. So that means that we're now in a position where we have the technology, where we have this the hardware also, but also the software instruments. Everyone talks about AI, everyone talks about machine learning. Nobody knows what it is, but everyone talks about it. And these instruments allow you to reduce the time significantly, reduce the cost virtually, I don't want to say to zero, be also reduce the amount of human intervention, which means you don't have to have many people working on these transactions. Working on transactions not only means people cost, but also people mistakes, because we commit mistakes, and that's also not good. And then the fraud thing, detecting fraud. So all these four elements allow, in principle, many new entrants, financial institutions into the market, like companies like yourselves, to speed up the process. So we're seeing a growth that is exponential, not linear anymore, and we're going to be seeing this thanks to technology. So when I go to places like Zimbabwe, in other markets that are under development, they don't have to be underdeveloped markets, but markets where receivables finance has not been in place yet. And when you go into those markets, what I tell them, you don't have to start where we started 50 years ago in Germany. You can start where today. So we bring to you the experience that we made in committing mistakes, and so you don't have to do them yourselves, and you start afresh with the right technology. So we can offer to small financial institutions, bank or no bank, the opportunity to use that technology and provide fast, cheap not, but at lower cost, safe, and efficient programs to their clients. So technology is super important, because at the end of the day, you're not going to finance only one invoice per day. Oh, you're going to be financing hundreds, thousands, millions of invoices. So technology, without technology, there is no receivable finance business today anymore.
And you know, each of the four, and you mentioned more than four elements, I think it was 7 to 8. Each element is a subject of a fireside chat on its own. So maybe we have that also in the future. So, you know, you touched upon the advantages briefly, but could you also elaborate on that a little bit more, that for a corporate, availing an invoice factoring or asset-based or receivables finance or payables finance, whatever you want, however you look at it, as opposed to other types of cash management solutions, what are the advantages that would get a corporate excited to investigate or even partake in this type of financing?
For let's say for in principle, when we say there is 99% of small and medium enterprises, then there is 1% of large ones, and the large ones are the large ones, the Microsofts, the Tatas of the world, and the BMWs, and so on and so forth. So there is two players in here. So one super mighty one, and then the other ones that are not. It's in the interest of both parties to exist, because the big one cannot exist without the many small ones, and the small ones need the big one also. And so there is a relationship, but it's a disparate one. And where receivable finance comes into the game also is when you have a large buyer. Every country has those large buyers. In some countries, it's like the top telecom, energy provider, whoever. Even the government is one buyer, and then there is the many small ones, and it's in the interest of the big ones that the small ones survive. So with this instrument, so-called supply chain finance or reverse factoring, which is one of the instruments, may be a solution for them to help the many suppliers to get financed quicker than before. So I talked briefly about full service factoring at the beginning, but in some economies it may be helpful to start with supply chain finance slash reverse factoring slash confirming, as they are called in different geographies. So everyone benefits from this. The big corporates and living in a country with a large industrial base. My father used to work for Siemens, big industrial complex in this country. And he was always telling me, Federico, you know what? Siemens does a lot of industrial stuff, but at the end of the day, we're a bank. And I said, what do you mean, Papa? Well, we're a bank with an adjacent industrial complex. And so Siemens has a big bank, and all the industrial complexes have a big bank. So we see also those financial institutions from those industrial complexes to be, at the end of the day, big promoters of receivable finance. That means, they're the first ones, and then there is the regulated, let's say, banking industry that provides it for everyone. So it is good for corporates, and it's also good for the many others. Everyone benefits from it.
Absolutely, and I like the point that you had mentioned in our early chats as well, that for the banks are designed to lend, as you said, to the big guys, right? Whereas 90%, and this is a tale as old as time, as they say, 90% are the smaller guys who do need the financing. So at some point, if you don't finance them, you are going to lose out on the market the way we're evolving as a global economy. So the advantage to the financing institution is to stay competitive. You also have to participate in this part of the lending economy as well. Wonderful. So now efcom processes a large volume of transactions globally. Can you tell us the volume is pretty large, and something about the solutions that you offer as well?
Right. When the founders of this company started 25 years ago, one of the first clients that the company had was Deutsche Bank, Postbank. So you can tell they started 25 years ago with us because they had zero receivable finance business by then. So what they said is, hey guys, we're starting from zero, but obviously we don't want to do zero tomorrow. And not one and two, we want to be doing millions, billions, many billions. Deutsche Bank, Postbank does 60 billion per year in factoring volume. So this is a big number. By the way, they're one of our largest. No, they're the largest clients we have. But if you go into similar economies like France or the UK, if you go to the BNP Paribas and the big banks in the UK, HSBC and stuff, they do similar numbers. So between 40 and 60 billion in transaction volume for receivable finance. So all in all our 50 clients together process per year around 210 billion euro in receivable finance. That's also a large number. That's 50% of the German market. which is 400 billion, and in a decent percentage of the global market also. So the system process hundreds of millions of invoices per year,
Right.
process many companies. So behind those clients are, let's say, some 40,000 direct clients. And then there is over a million of debtor companies. So the ecosystem itself is huge. You could tell it is a little bit like a Facebook of the economy in the regions where we're present. So you could tell how they're doing. You know, we're not doing the job right now. We're not analyzing that, but it's something that that will come, Kunjan. Bear with us, and we'll also figure that out. So yeah, in principle, what do we offer? We offer, let's say, all the cocktail of different types of factoring products out there. And you will probably hear in the market things like full service factoring, in-house factoring, which is also invoice discounting. We started Islamic factoring a few years ago. Why is that? Because as you know, you live in that geography. The Emirates and Saudi Arabia are betting heavily on finance for the time after oil. So that's one of important business that they want to promote. And obviously in that geography, apart from, let's say, the conventional finance, you also have Islamic finance. And we developed a solution that is Sharia compliant for that particular region. So if there's anything that comes into the market that's required, we probably have it. When someone calls us up and says, can we do residual finance with you? Do you have a solution? I said, we probably have 95, 98% of what you need during your entire lifetime. What we probably don't have is a few interfaces to systems that we don't have yet, but for the rest, whether you want to do syndication, whether you want to do ABS, asset-based securitization, whether you want to pool with others, whether you want to have recourse or non-recourse, international, domestic, multi-currency, and so it goes. Everything is possible because over the last 25 years, we've seen so many deviations, and requests and requirements from our clients, even from yourselves.
So you are the master logic provider for everything supply chain finance. So if I'm adding all of that, it sounds about $250 billion worth, I would say, yearly.
Mm-hmm. Pretty much. Yeah, pretty much. And tendency going like this, Kunjan. So
sure.
I mean, our incumbent customers grow. Sometimes by buying other companies, but also from an organic point of view, because the market is growing double digit. And when someone tells us, hey, we're stable, then I say, you're doing something wrong, because the market is going like that. And if you're stable, that sounds in principle okay, but it's not okay. Yeah.
Well, that's very true. And so, of course, there is talk more about new technology, AI, ML, and all of those little other acronyms that we read every day. So, you know, how does that help with your solution or its application in invoice factoring or supply chain finance overall? AI, ML, and I stick to AI, ML. I don't talk about blockchain because that's a completely different topic and use case. But as ancillary add-on technology, how do you see their application in making this, you know, as the graph you were saying, this way, maybe just 90 degrees with those technologies?
Right. AI at the beginning, I mean, when I studied artificial intelligence many years ago in the US, it was like a buzzword like today, but it was not really operational. We lacked the computing power and
Yeah.
and the amount of data.
Yeah.
And this is what you this is what you need for AI. You need a bunch of computing power and you need a bunch of data to make something that is useful. Today we have both. And so when did we start going into the space? 10 years ago, we entered into the space with something that we call factoring expert matching. So what does that mean? Factoring expert matching is when you receive a bunch of invoices. No, you have a lot of open invoices in your system, in our system. Let's say you have 2,000-3,000 invoices in your system, or 4,000, 10,000 invoices in your system that are live, that have not yet been paid. And now payments come in. And if one payment comes in to pay one invoice, okay, that's easy to find. But what happens if you receive 500 to 1,000 payments per day to pay some invoices? Our systems are able to match invoices and payments, let's say 30 to 50% of the cases, 100%. But the other 50 to 70%, you have to look manually, because maybe something wasn't typed correctly in the payment, or someone is paying 3 or 4 invoices at once, and so it goes. So very tedious job. And what we did is develop an AI tool using so-called fuzzy logic. So that means approximating you to what it probably would be. It's not exact, it's approximate.
Right.
And the instrument would tell you, hey, Federico, most likely 98, 97, 94, 86, whatsoever percentages, this invoice is being paid by that payment that came in, or these invoices were paid by that payment. So we use AI for that. It's a learning tool. So over time it learns. And when we introduce that in a company, normally within 1 month time, we can see that those matching rates increase from 30 to 50 up to 80 to 95%. So this is AI making our life easier. So this is history. This is all done. This is, yeah. But where we're aiming at now is something more revolutionary. We're using the large amount of data and the large and the computing power to predict the future. So that means that we want to know, because this is a factor wants to know, am I financing someone who's okay, or am I financing someone who's going to give me a lot of trouble? And since our systems are working basically 24/7, they're basically checking the vital systems of your ecosystem. So buyers, vendors, behavior, the interactivity between them. And if they detect that something is going into a wrong direction, that can be geographically, by industry, by client groups, then it will let you know, ping, Kunjan, watch out. It may be nothing, but have a observe. And they would keep telling you if something is going into the wrong direction or the good direction, and then you can take the measures that you need to do.
Right.
So this is where we're heading to.
That's really fantastic for financial inclusion in the context of this product, because as it is straight backed, and it's shorter term. It's less than 120 days. So that in a way makes it agile. And then when you add AI and this type of future predictability on default probability, I may say, if I can say, we might just live in real-time credit environment,
yes.
right? Where
yes.
you can just be on top of it right away. And that way it works both ways, right? So corporates that do not qualify, you may understand they actually do qualify. And then those that are very rosy that have qualify, you may understand that they probably don't have that longevity. So I think that's a very, very interesting application, and hope to see that, pick up momentum in the next couple of years.
Maybe a little detail on this one, because
yeah.
When you're working in geographies like in Europe, you have these you know, credit insurance companies are out there that help you as a factor to say, hey, if you're buying an invoice, then don't worry, here's an insurance. If they go default, don't worry, we take care of it. But what happens if you go into markets where there is no data? And there are plenty of them. I remember when I was first in Guatemala, talking about the subject matter some years ago, and I was explaining everything. And then I talked about credit insurance companies, and they asked me, Federico, what is that? I said, well, someone that will, you know, insure the invoices that you purchase. So if there's a default, we don't have that in our country. Okay. Credit rating, a few companies, the big ones. Maybe. That's it, period. Yeah. Old numbers, difficult. So what happens if you use AI and ML, machine learning, with the big data? Well, then you may not be requiring those stakeholders anymore. I remember that in Zimbabwe, when we talked about it, and there was someone from South Africa saying that they're providing these kind of products like credit risk insurance. But unfortunately, in Zimbabwe and other countries, they don't have the data. So and then I got up and said, well, maybe Mr. XYZ, maybe we will not need you here. The audience was like, what's talking about, Federico? And said, well, because of we're creating the data while we work together using AI and ML. So, and we're going to be much closer to the pulse of the reality that any credit insurer can be working with historical stuff, you know. Right. It's like your own sanity. You were healthy a year ago when you went to the doctor. Cool. What do you know about how you're doing now? Nothing. Yeah.
You know, there is a fascinating subject: credit rating, credit analysis, machine learning, AI. And I have been told that we have maybe a minute or two left. So there are just 2 to 3 questions that I really, really want to put to you. You know, then we leave it open for the audience if they have any follow-on questions with us. So, you know, you touched upon a lot of things, but, you know, just maybe if you can very summarize the trends that you notice in supply chain finance, invoice factoring. What do we? Yeah.
The trend is going for more digital. Paper is going to disappear. We're going to have not bilateral but multilateral agreements across the globe in increasing trade finance. By that I mean, during COVID, everyone trade went down, and then everyone said, okay, we're going to have trouble in the future. No trade is going to happen. Everyone is going to be working by himself. The opposite happened. Right. Trade just exploded. I mean, what did we hear yesterday? The Dow reached 40,000 for the first time in history. So everyone is super. In Germany, the stock exchange is doing the same. So we're living in a world of crisis, as we know, but it seems that trade and production is not stopping. So the trend is there, and everyone has heard of ChatGPT and stuff. We're going to see a huge spin in technology in here, Kunjan. I can't even think how much that is going to accelerate the pace of what we're seeing. If we think we're going fast right now, yeah, it's going to be another dimension during the next years.
Breakneck speed. So Federico, the last question, and if you were stranded on an island.
A nice island?
A beautiful island, you know, coconut trees, tropical fruit, beautiful water, no sharks.
Okay.
What are the 3 things you would like to have with you?
Definitely my wife, because she's my mate, and she would not let me go there alone. So
Oh, that's
if
nice.
you're gonna have fun, I want to have fun with you. So she has to be there, absolutely. And because I'm a hobby cook, I think I need some utensils to cook whatever is out there, fish, dishes, coconuts, whatever, knives, things like that. So
Right.
so the elementary things that you need for cooking, I guess, and spices. So what else do you want? That's it, not
No,
more.
absolutely. And I close on this note. Since you mentioned Chat GPT, I asked Chat GPT, give me a hilarious joke for working capital finance.
Okay,
So
now I'm
if this
curious to see.
tanks, if this tanks, it's Chat GPT. So why did the finance manager throw their money into the river? Because they wanted to see their cash flow.
Ah, very nice.
Okay, great. Thank you so much, Federico. Our
Thank
time
you.
is up. Thank you so much.
Thank you. Thank you all. Thank you all. And thank you for listening.
Thank you, Federico.
Thank you, Pankaj.
Hope to
Thank you
see you
to
in Korea.
Thank you to insightful speakers for sharing their expertise and wisdom with us. Now, I would like to invite our co-founder and chairman, CA Pankaj Bandra. Pankaj has been at the forefront of the trade finance world with over 2 decades of experience in the industry and has been leading 360 TF at various brands like BAFT, ITFA, and ICC committees. Over to you, Pankaj, for a few words before we conclude today's session.
No, thank you. It's great to be there, part of the third series of Business Unplugged of 360 TF in the foundation week of 360 TF as we celebrate our third foundation day on 23rd of May, just few days away. And great to have our friend Federico from efcom, Germany with us today. It has been very. I was watching the Q&A and the traction which have been there on the background. It is great that our association with Federico and efcom, we've been meeting in various conferences. First one we met in Washington DC, with your colleague, and then followed up by the FCA conferences. And here we are today with this sort of association. I'm sure with this today's brainstorming, there are a lot of inputs for the corporates as well as the institution, how the technology can further embrace these solutions on the working capital and the supply chain finance side. And of course, especially in Asia and Middle East and UAE, where the supply chain finance and factoring has got a very low penetration, and also the Islamic finance also, which Federico, you're leading from the efcom side, right? So we see a lot of opportunity in this part of the world, including India, subcontinent, and Middle East. And I'm sure with the your knowledge and your leadership, and of course the innovation by efcom, a lot of value add can be done for the institution and corporates in this part of the world. And especially, of course, we've been associating with us, and I'm sure as a 360 TF also we will able to add a lot of value to the corporates into who are into import and export. So thank you to have it with us today, and we
My
hopefully
pleasure.
our journey of partnership, and we do such more events in times to come.
Absolutely.
So yeah, you have I think last week you were in Armenia, right?
Correct. Yes. Very exciting. Yes, very exciting. What's happening in the region also, and but the region is starting very small, potential again very large, and you need those champions, those innovators like your company to go on the forefront, and showcase what the opportunities are in this space. And there is plenty for everyone, as the numbers show. So nobody's going to be left behind. You just need do it, and don't be shy, because the market is waiting for it. Yeah.
Indeed. No, thank you once again, and Akshita, over to you. But thank you, Federico. Yeah.
Thank you all.
Thank you, Pankaj. Now let's dive into the interesting questions asked by our audience. So Naman asks, is there any minimum turnover as a criteria for factoring? Many a times we come across companies asking if you have earlier experience with buyer. Is there a solution for the same?
So the question is relating to the experience with the buyer. Is that correct, Akshita? Is that what I understood?
Yes.
Yeah, I think this refers to the example of I was mentioning before about the insurances and the companies that do rate companies and the data behind. Again, in a market where you have a lot of transparency and information, that is all nice. But in a market where you don't have that information, financial institutions, bankers, they fear the risk like the devil, of course, because you don't want to be the one risking your business. So in this case, the only thing that helps is to gather data as much as possible. And what I suggest in such an environment is we have this instrument that we call reverse factoring. Reverse factoring is an instrument where you have a big buyer that's a premium creditor. So he's going, or this company is most likely going to pay. So I say most likely because nothing is sure in life, but certainly will. And this buyer is going to have many suppliers. So what you will start doing as a factor is you will start getting the experience and getting the data that you require to create your own database, right? With a bunch of companies in that ecosystem from a good buyer. So you have vendors, multiple small vendors, and you get all that data. I say that because our largest client in Germany, Postbank, Deutsche Bank, with 60 billion in transaction volume, huge amount of invoices, they do not credit insure any invoice. Zero. And not because they are doing it themselves. No, because the best database is their own database. So what I'm trying to say here is, if you're entering into a market where there's no data, well, gather the data. How to gather the data? Start with reverse factoring and start getting the data. You have one, maybe two, maybe three, maybe four, maybe 10 great buyers, because in every industry, in every geography, you have those, and start playing with them. Your margins at the beginning will be small. Hey, they will be small, but they will be safe. And once you have collected the data, let's say over a period of time, 2 years, 3 years, 4 years, depending on how much you are engaged and how much appetite you have, you start entering into full service factoring, and then you start asking for the margins, the 3%, instead of the 0 point something percent. And that's when you start making good deals, but you will enter a market with information, with data that you know your customer, the KYC, and that's something I recommend to do. I don't know. I hope that answers the question.
It does perfectly. I just add on very quickly. So Federico mentioned the vintage of the relationship between the buyer and the supplier, which is essential. Having said that, there is technology, there are providers who are comfortable even with a shorter tenure of relationship to finance that. But coming back to the question on the value of the invoice, It really depends on the contract. So the way traditionally supply chain or invoice factoring is done is it is based on a facility. So you will contract for a facility of say 500,000, you also contract for a facility of a 250,000, etc. That is granted to you. Now the actual value of the invoice could be 5K, could be 10K, etc. That depends on the player. The invoice level factoring, which maybe is what the question may also be referring to, there are also service providers who offer that service. Thanks, Akshita.
And invoice values can vary from very small to very large. I've seen clients that buy invoices worth over €1 million, one invoice. And then there's the ones that, we're talking €10, €5. Yeah.
Thank you. So Abhishek is asking, frauds and receivable financing under commodity trade has shaken the industry in the past, and many banks and financial institutions shut down this business due to heavy losses. How the confidence and trust can be developed to have a deeper penetration of receivable financing in times to come?
Good question. Yeah, we have seen players coming and going. Unfortunately, in geographies where there is no regulation, I name one that's very close to us, which is Switzerland. You would believe Switzerland is a country that everything was perfect, but Switzerland has a not regulated market. So we see organizations coming and going because they don't pay the attention to the risk, and then there is regulated markets where it's better. But regulated markets also are not safe from fraud and stuff, and that means that you have to look who you're dealing with. This is one thing. There are a number of different types of frauds in the industry, if that was the question, and this is for instance, the double pledging of invoices. So if I'm a fraudster and I want to cash a lot of money quickly, I go with my, let's say, large invoice. I go to 360TF, but also to 10 other factors, and I sell the same invoice to everyone. So obviously that invoice will only pay once, but not 10 times. By the time this is discovered, I'm gone. I'm on the island that Kunjan was referring to before. Now nobody will see Federico anymore. But no, joke aside. So how do you cope with that? Well, technology comes into the game again. There are solutions using DLT, meaning blockchain solution, where you can put into a repository invoices that have been pledged already, and if someone is trying to sell twice, that invoice will be detected by the system. Moneta Go is one of our partners, and they are using that technology, and we commercialize it together so that there is a full transparency of that in the market. A second one is when a geography mandates to use registries with digital invoices, and this is happening now more and more in different countries. Interestingly enough, the country I was mentioning where there's only 3%, Mexico, they have that, and Turkey is also having that system, and Chile also has that. So in that case, if you buy a registered invoice, you know that the regulator had a repository where okay, this invoice is safe, and so these kind of frauds are not going to happen. So with technology and some regulation, we're trying to keep fraud at bay. Obviously, there's always going to be a next trick, a next thing, and we just need to anticipate or follow.
Yeah, this registry is there in India, and of course upcoming here in the UAE as well.
Mm-hmm. Absolutely.
Okay, thank you. So the next question is, why are some buyers not willing to give assignments? Is this an impending factor in financing?
Can you repeat that, please, again? Yeah.
Sure. Why are some buyers not willing to give assignments? Is this an impending factor in financing?
So it's, well, okay, it depends on how the agreement has been constructed. If it is an impeding factor in invoice factoring, right? Technically, when the notice of the overall general notice of assignment has been signed by the seller, the assigner, the factor, and the obligor, it is understood that the obligor / anchor is liable to pay. Okay, so that's the overall factoring agreement. Now, what happens on an operational basis is when these invoices are submitted, etc., and then the acceptance on the assignment does not take place, which is a common problem. That is not technically, legally, and I say this with the limited legal knowledge that I have, this is not an impeding factor. If push comes to shove, and if you wanted to adjudicate this, you could take the buyer or the anchor to court of law and say, look, you have signed the initial NOA, notice of assignment. That means by definition, the invoice assignment is assumed. So even whether you accept the acceptance, you are still liable to pay. So as such, it is not an impeding factor, technically.
Thank you.
Fine, that marks the end of our questions. So thank you everyone who joined us for this fireside chat. We appreciate your time and thoughtful contributions. As we near the conclusion of today's session, let's close it with a quick poll.
It says that host and panelists cannot vote. I tried voting.
Me too.
Me free.
Yeah, it's not functioning. I'm trying to hit the button, but it's not.
No, it's been disabled. They're not giving us the choice.
Yeah.
We wanted the audience to poll.
Definitely the developments of
Milliliter, right.
Milliliter, yes, is one that's quite hot. Next week in London, we're going to be touching that topic extensively. Yeah.
No, it's come such a long way. 3 years ago, where it was just a concept. Now you have UK, etc., moving ahead, and obviously that's the basis of common law elsewhere. So I'm sure that's interesting.
Yeah.
So hope everyone has given their poll, submitted the poll. Thank you everyone for joining in. Stay tuned as we unfold the next topic of the 4th episode of our Business Unplugged series. Thank you everyone.
Thank you so much. Thank you, Federico.
Thank you, Kunjan. Thank you, Pankaj. Thank you, Vikram. Thank you, Akshita, and the rest of the team, of course, for making this possible. It's been a pleasure and fun.
Yeah, thank you to the audience as well.
Absolutely.
Have a lovely day.
Bye-bye.